8 ways to pay down your credit cards. If you're using more than 5% of your credit card limits, you need to figure out a way to pay your credit cards down. 30% of your credit profile depends on your credit card usage. That is huge, and it's the quickest way to increase your score. The important thing is, when you get your cards paid down, your objective should be to never allow the card balances to exceed 5% of your total credit card limit. If you have a need in the future that would normally require a credit card increase, consider one of the ideas below to avoid increasing your credit card debt. In other words, once you get free of credit card debt, then do everything that you can to stay out of credit card debt. Number 1, if your score is 650 or above, go online and apply for a personal loan through Lending Club or something similar. Apply for $1,000 more than what you need to pay your credit cards down to zero. Go through the process and see what they'd be willing to lend you and at what rate. If they're willing to loan you what you're looking for and at a rate that's less than your credit cards are charging, that could be a quick solution. Remember, the interest rate on your credit cards are probably near 30% annually. If you own a vehicle, see about getting a loan secured by the vehicle, or see what you can refinance if you already have a loan on it. Number 3, if you own a home, explore the possibility of securing an equity line. Avoid refinancing if you can. The lender will attempt to convince you that it is cheaper to refinance than to get an equity line. In most cases, a refinance will result in a lower monthly payment, but the overall cost is much greater. However, a refinance is not the worst thing in the world, and it is probably better than carrying the credit card debt. If your credit scores are below 650, consider asking a family member or a friend for a 60-day personal loan. Explain to them what you are doing and how you're going to pay them back. Take the money and pay down the credit cards. In 30 days, start checking to see if the paid down amounts are showing on your credit report. As soon as your credit usage decreases, your score will increase. At that point, apply for a personal loan from the Lending Club or a similar company and pay back whoever loans you the money. Your new personal loan should not have much effect on your credit score, if any. Number 5, what do you own? Is there anything that you can sell to generate the funds you need to pay your credit cards down? Number 6, consider a side gig. Is there anything that you can do on the internet to generate funds? Number 7, consider a part-time job to generate enough money to pay down your credit cards. Number 8, there's always a possibility of taking something to a pawn shop if you have something of value that you wish to be able to reclaim. The whole idea is to pay down your credit cards to zero or near zero in order for your scores to increase. With an increased score, you have more flexibility to generate funds through personal loans on the internet. The new personal loan will give you the ability to pay someone back or to redeem an item. Remember, paying down credit cards will increase your score, and getting a personal loan will have little, if any, effect on your scores. Credit card debt carries a high interest rate. That debt is already existing. By moving your credit card debt to your personal loan may not make a lot of difference on your monthly payments. However, it will have a positive impact on your credit profile. Your credit profile is what determines your credit score. Most people focus on their credit scores rather than on their credit profile. Your credit profile is made up of 5 things when it comes to your FICO score. 35% of your score is determined by your payment history. 30-day, 60-day, 90-day payments are terrible on this part of your credit profile. Avoid them as much as you can. 30% of your score is determined by credit limit usage. 15% of your score is determined by the length of your credit history. 10% of your score is determined by the mix of your credit types. What types of loans do you have? 10% of your score is determined by the number of recent credit attempts or inquiries. Now, while you're in the process of paying down your credit cards, the next best approach is to become an authorized user on a family member or friend's credit card. You really have to be careful in this area. The only card you want to be added to is one that has a high credit limit and low usage. Dad or mom, grandpa or grandma are often the best candidates. They can add you to one of their cards as an authorized user. A card is issued with your name on it, but it is sent to the owner of the primary card to which you are being added. You do not get a credit card. That should eliminate any risk to the owner of the card. However, the credit limit gets added to your credit report as well as the credit history. That can be a huge boost to your credit profile. Now, to understand the concept of authorized user, you may want to consider Googling the phrase authorized user to get a better understanding of the concept and maybe even to print out documents to hand to any person or persons you intend to approach with the ask that they add you to one of their credit cards. The owner of a card needs to realize and understand that as long as they are in possession of your authorized user card, they really have no risk. Also, if you can explain to them that you are trying to improve your credit profile, people tend to want to help others who are trying to engage in self-improvement. If mom or dad or grandpa or grandma are not a potential source for you, consider approaching a friend or a fellow employee who appear to be responsible people. You could consider offering a favor in return or even some cash. Whatever you can do to get your credit card usage down is going to be a huge benefit, and it's worth some effort.